Welcome to Nasdaq TradeTalks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, a regulatory landscape, and capital markets. I'm your host, Jill Malandrino, and joining us this afternoon, we have Arthur Breitman, founder of Tezos, as well as Stephanie Ramezan, co-founder and CEO of the Crypto Collective. We're here to discuss the tokenization of uranium. It is great to have the both of you with us. Welcome to Trade Talks. Tokenization, certainly a hot topic within the capital market space. But Arthur, uranium is interesting. Why are investors demanding access to uranium at this point?
Well, I think it's a fascinating commodity, and we are seeing a renaissance in nuclear programs around the world. Countries are changing the regulations, and people are restarting nuclear projects, building small nuclear reactor. And a lot of this, of course, has been driven by the AI revolution, which is using more and more energy and is planning to use even more in the coming years.
Yeah. And Stephanie, where are some of the barriers to entry in terms of getting access to uranium, and why tokenization?
So decades, uranium investment was basically a closed shop. Hedge funds and large hedge funds at that, so utility companies or state procurement were really the only players in the market who were able to gain access. So everyone else is locked out. So tokenization is really what's flipping that on its head to break down those barriers in terms of the minimum investment ticket. You could be accessing now this commodity with just a few dollars, but you're also adding serious efficiency to those large institutional players who are trading billions of dollars, but until now with very little price transparency, efficiency, and just a very clunky market, which is not fit for purpose in terms of where the world is going.
Yeah. And Arthur, I want to go back to uranium specifically for a moment here, because next week, of course, September 21st through the 28th is Climate Week NYC. And when you are thinking about uranium specifically, how do you see it complementing renewable resources such as solar, such as wind, water, to getting to that path to net zero?
Absolutely. And I think one of the trends that I observed in the past decade was that the attitudes toward nuclear power in the environmental movement changed a lot. Proliferation, the risk of nuclear accidents or storage of nuclear waste used to be a concern. I think a lot of these have been answered successfully, and with a focus on carbon, nuclear became a lot more popular. What was needed was this catalyst, and this catalyst came, I think, in the past couple of years. It complements a lot of renewables. I think solar is incredible. It's extremely cheap. It has gotten cheaper. It can scale very, very quickly. Nuclear reactors still take a lot of time to build, but it's not always sunny. And you need this base load. You need this capacity to produce power when the wind is not blowing and when the sun is not shining. And nuclear provides that. So it's a really good complement to those renewable approaches.
Yeah, I mean, especially when you think about the amount of demand that's out there right now. You can't just look at one particular resource, but multiple resources, Arthur, as it relates to being able to satisfy this demand. I mean, ironically, the climate tech conversation, the catalyst behind it really was through AI and being able to support these emerging technologies and to maintain innovation leadership. And that's really what's been the catalyst to reopening that climate tech conversation. At least that's how, I've perceived it with my reporting.
Mm-hmm. No, I agree. And nuclear is a very regulated space, of course, for obvious reasons. And so watching the public opinion change on nuclear power, I think, was a good way to get ahead of the trend of nuclear power plants being rebuilt. It's already been a few years since public opinion now favors nuclear power. And when voters tend to favor something, the politics tend to follow perhaps a few years after.
Yeah. Stephanie, would you say that this is part of a broader commodities move to tokenization and having more efficient access to it?
Oh, 100%. I mean, tokenized uranium isn't an isolated experiment. It's not an experiment at all. It's part of a wave, and we're seeing real world assets from real estate to carbon credits move on chain. This is because tokenization reduces friction, it cuts out the opacity, and it brings transparency that legacy systems just can't match. In the case of uranium, it means that a commodity that was, as mentioned earlier, was untouchable is suddenly liquid, accessible, and also auditable. And that's not to be underestimated, especially with that ESG angle in terms of what blockchain can bring to this debate.
So it sounds as if uranium could potentially be the precedent to further tokenization of commodities.
Absolutely. It's a structural shift. People have been talking about RWAs for years, but I feel like the energy has gone into the wrong direction with some RWAs, tokenization for the sake of tokenization, and uranium is really that perfect use case.
Arthur, what would be the difference getting access through tokenization versus a wrapper such as an ETF, as an example?
I mean, I think the more vehicles, the better. Right now, today, there are some ETPs that offer uranium, but they are a fund. So if you own the ETP, you do not actually own the uranium. There's no creation, no redemption. And as a result, those vehicles have not tracked the price of uranium. Sometimes they've had 15% discount or premium to the NAV and for periods of months on end. So the difference here is that the product actually gives you beneficial ownership of uranium or U3O8, uranium oxide, and can track the underlying spot commodity much better as a result. I would say that a lot of benefits of tokenization is access to a global network. There are custodians all around the world who have integrated custody for tokens on blockchains and on Tezos, of course. And in tokenizing, you are tapping into all of these custodians. You're tapping into everyone building exchanges for RWAs. You're tapping into anyone building lending and borrowing protocol. So it's this access to a global base of investor, but also a global base of technologies and middleware being built for these assets.
So, Stephanie, this is available for retail and institutional investors to trade right now. How would they get access to it? Is it on exchanges, or what is the what does the process look like in terms of being able to trade these tokens?
Oh, so it originally launched on uranium.io, and we've recently launched on multiple centralized exchanges. But what's really interesting in the conversations that are also going on in the background with larger, more traditional fintech platforms that are serving a much broader investment base. So I think what's going to be the real tipping point with uranium is that this is not a cryptocurrency. This is not a token that could be mistaken for any other type of cryptocurrency. This is just a blockchain-based tokenized version of a physical commodity. And that is really groundbreaking. So I think what's going to be very interesting is where we're going to see that next wave of adoption of Web 2 users into Web 3 because they want access to this commodity. And to those people, it's just about access, and it's about blockchain-based technology enabling that access.
Was there anything in the the future report that stood out in addition to the demand for uranium, Stephanie?
Oh, multiple things, Jill. Too many to mention, but I think it was this disparity that was just so clear from the data in terms of access, supply, demand, and how the uranium is really just a topic that people want to talk about now because people are more educated, more familiar. Arthur touched upon earlier the stigma that was attached to uranium due to various points in history, but now people understand the AI and data center piece. People don't talk about how the electricity is going to be generated for those AI and data centers. An individual just wants to use their chat GPT. They're not thinking about the broader infrastructure and how those AI and data centers are going to be fueled. But some of the stats that are coming out, just to give you an example, as you mentioned, I think 97% of institutional investors would consider uranium exposure if access barriers were reduced, yet only 6% of them have ever traded it.
Yeah, the TAM there is quite impressive. Arthur, I'll ask you the same question as well. Anything that stood out from the Fuel the Future report that you thought was, something worth noting?
Yeah, I mean, I look at the other side, and it's something that we also saw in conferences. We were approached by a lot of players who are on the supply side of uranium, who are sitting on supply, and they also would like to trade it, but they would like to trade it in much smaller lots than is currently available for them. They would like this liquidity, and so this demand on the supply side and the sales side is also quite interesting and present.
All right, appreciate both of your insights. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.